Hello everyone, great news is coming from the US Bureau of Labor Statistics. On their latest economic news release, the data showed that the US inflation slows again in November to 7.1%. There were several misses across the board in the report. The CPI rose 0.1% in November, as expected 0.3%, while the last month it rose 0.4%. The inflation year over year, it's currently at 7.1%. The expected one was 7.3%, while the last month it was 7.7%. Another important metric to look at is the CPI core, which rose 0.2% in November, as expected 0.3%, while last month it was also 0.3%. And the year over year, the CPI core, it's currently at 6%, while the year over year was expected to be 6.1%, and the last month it was 6.3%. This is great news for the financial markets and the reason why the stocks are surging, as it appears that the Fed's mission to tame inflation is making progress. It seems like the massive tightening of financial conditions is starting to work its way through the core of the economy and dent inflation. This definitely lowers the probability of more ultra-aggressive monetary policy actions from the Fed into the end of the year and beyond. The stock market rallied during the day yesterday, reacting positively to the news, but then the gains faded later during the day. The inflation decelerating is good news for the Fed, but we expect Powell will want to prevent a massive rally in stock and bond markets, as the only mistake he wants to avoid is to prematurely let the inflation fight go. In the 70s, that was an expensive mistake. How Powell is going to handle this rally is to be seen, but seeing stocks and bonds rally so early goes against the effort the Fed is putting to fight inflation. Thus, we suggest that one should not rush and jump into this hype train yet. Anyhow, we are going to keep you updated after the next Fed meeting to cover its implications for the markets, so keep checking our channel. Thank you for watching and see you soon.